Hello, and welcome to the Emergency Cash Flow Forecasting tutorial.
My name is Glen Sartori, and I am a business consultant at the One Stop Shop Business Center. I have extensive education and work experience as noted here regarding business financial management, and I'm a nationally accredited business consultant.
Note that this tool is designed as a short-term aid to get cash flow under control during an emergency. Under normal operating circumstances, our monthly cash flow forecasting tool is recommended. Either of these can be downloaded from our website at www.advantageoakland.com/one-stop-shop under Tools and Templates.
This tutorial and workbook are based on managerial accounting and not on tax accounting. If you have any questions regarding tax-based issues, they should be directed to your tax professional. We have three main objectives for this training. The first is to explain the basic concepts of cash flow forecasting. The second is to help you understand the practices, rules, and tools that are available to you. And the third is to explain the basics of these tools and how they work. It is important to know that managing your cash flow at all times is imperative, but during an emergency can be critical. This tutorial will only provide a basic understanding of cash flow forecasting. For more detailed assistance, please go to our website and request counseling. This form only takes a couple of minutes to fill out, and a consultant will reach out to you. Yes, these statistics are common. 50% of all businesses will fail within the first 5 years of opening, and of those, 82% fail because they did not properly forecast their cash needs. These are under normal operating circumstances. Emergencies compound this problem immensely.
To get started, you will need copies of the last 12 months of your monthly bank statements to determine the types of payments and dates they are made from your account. You'll also need to download the workbook titled Emergency Cash Forecast from our website. The workbook you download should look similar to this when you open it. Special note, once you have entered data, do not delete it, as this will affect your cash balances. Only change estimates where indicated. If you notice the tabs at the bottom of the workbook, you will find one titled Instructions. This includes most of the basic instructions for the workbook. Each page is password protected to prevent the accidental overwriting of formulas, as there are multiple hidden cells throughout the workbook. Start by entering the information into the highlighted fields on the Summary tab. The week ending date should always be a Saturday. You can enter the current Saturday date or the first Saturday of the year. The only other cell for entry is the company name, which will automatically populate to each page. Next, enter the information in the highlighted fields on the Banking tab. The bank balance should be equal to the bank balance on your statement at the beginning of the week you entered in the Summary tab. If you utilize a secondary payroll or savings account, there is an optional secondary account on the Banking tab. The Cash In-Out cell is the weekly total of all cash in, your sales, minus cash out. This is cash paid out only, not normal bills paid. On the secondary account, the transfers in and transfer out cells are cash coming in or out of the main account. These amounts must also be included in your weekly cash in and out total. For example, to take money out of account 1 and put it into account 2, this would be calculated as cash out of account 1 and a transfer into account 2. Your total cash on hand will be the same, it will just be dispersed between the two accounts. There are 4 remaining tabs. If you are a cash-only business, you can skip the AR or Accounts Receivable tab, as all cash and credit card sales are accounted for on the Banking tab. On the AR tab, enter the highlighted information: customer name, the invoice number, the date you invoiced the customer, the amount of the invoice, and the due date. The override days column is there so you don't have to change the original invoice date. Once an invoice comes due, you can check with the customer and find out when the payment will be received. Just type that number of days into the cell. This will automatically adjust the receiving date without changing the original. The estimated receivables row is to enter the dollar amount above and beyond what you have already accounted or billed for. It will reduce as you get closer to that date and eventually become zero when all your receivables are accounted for, usually the current week. For example, if 5 weeks from today's date you expect to sell $1,000 worth of products or services, you would enter $1,000 in that date cell. Once you bill a customer for something in that week, reduce your estimate by the amount you billed out. This will keep your overall estimate at $1,000. The AP tab works essentially the same way as AR, except with vendors and not customers. The main difference is the override days column. This will back up your expected payment date if you cannot pay on the date due. This way you can still track the oldest invoices. For example, if your invoice date is due on the 10th, but you can't pay until the 18th, you would enter 8 in the override days column. The recurring tab is designed for payments you make to vendors on a regular basis, such as credit cards, utility bills, etc. Be careful not to duplicate items in the AP tab. It is best to track all recurring payments here, as it will post the amounts for you, saving time. First, enter the name of the creditor, the credit card company, bank, utility. Then enter the frequency with which you make this payment, making sure that only the letter is used. Enter the day of the month that this payment is typically due. Most are fairly steady unless they fall on a holiday or weekend. Enter the amount due in column F. If your payment amount changes, use a best estimate. You will be able to compensate for this later. Notice that once you enter the estimated amount, that number is populated for you based on your previous selections. Once you make a payment, place that amount in row 6, actual paid. This is the amount that is used in calculating your payments, not the estimated. As an added feature, it will calculate for you how much you were over or under on your estimate, allowing you to make better estimates going forward. You can change your estimated payment amount at any time. This will not affect your cash totals. The Payroll tab will calculate your payroll, taxes, and any garnishments or other items related to your payroll. Since payroll is typically processed on an exact schedule, this tab will calculate for you based on your entered information. Enter the frequency of your payroll, followed by the day of the month your last payroll was paid. Enter your estimated payment amount of each item. You can adjust this later based on the changes in number of employees or rate of pay. Just like in the recurring tab, enter your total amount paid each pay period in row 6. This tab also calculates the difference between your estimate and actual, so you can make better estimates. After you have entered all of your existing information, return to the Summary tab. Ideally, you will see nothing but green shading on your Summary tab. Any information highlighted in red means that you are out of cash or negative during this period and must make adjustments. We cannot pay bills or payroll without cash. Sometimes the decision needs to be made to pay vendors later than their bills are due. Keep in constant contact with your vendors and work with them as much as possible. Ignoring the issue will not make it go away. In these difficult times, a lot of vendors are in the same predicament and would rather get the money late than not at all. In order to get to green, you will need to adjust the timing of your outgoing invoices until all red issues are resolved. Remember to make use of your override days column. This way you can back up payments as little as possible. Start with an invoice that is due within your red time period and add enough days to back it up to the next one. Then recheck your summary page to see the effect, if any. Repeat the process with each invoice as many times as necessary to correct the issue.
Remember that this tutorial may not answer every question and every scenario. This is just the basics. In order to properly assist you, please request counseling on our website at www.advantageoakland.com/one-stop-shop. This way you will be able to submit this workbook to me and I can assist you with your needs. Thank you. I look forward to hearing from you soon.